It's time to welcome our market master for the morning, Sandeep Bhatia, Executive Director and Head of Sales at Kotak Institutional Equities. Good morning, Sandeep. Good to have you with us. It's a confused market out here. We have run hard. It's the eighth consecutive quarter consecutive series when the contract will end higher than the previous month. Is it legitimate to believe that you could see one or two contracts of lower finishes?
No, even if these, yes, I think it's legitimate to believe that we are in sideways to slightly down market. It's, I don't think there are any big domestic uncertainties right now on the economy front. We are going into the Maharashtra elections. We are going into Haryana elections. So there's some political big events coming around there. And if those elections don't go well for the ruling party, then clearly there would be some kind of, messages which will be read. I would be very, careful to derive any quick conclusions out of any political elections going in the next 2 months. But the market may still want to take some conclusions. Market has a lot of expectations. Market expects everyone, everything to be aligned very quickly. So if there's political news which is, not in the pink of health kind of situation, the market can get definitely nervous.
But Sandeep, that would perhaps be a day's jitter or two. After all, every election, as one of the political commentators was telling us, cannot be seen as a referendum on the Prime Minister. He has a definite 5-year mandate. So maybe there will be a day or two of flutters. I'm more worried about the government's performance itself. It is now about 4 months old. Do you think that at some point in time investors will believe that actual action on the ground is not coming? Broad noises about 20 billion investment or 35 billion investment over 5 years or 10 years are not enough to keep the fire going. Do you think that worry on performance will be there at some point?
So, if you say that, let's not talk in generalities. Let's not talk about a 5-year, investment horizon. Let's not talk about, the fact that we will definitely see higher investments. Then we have to talk in specific, events. I think the only big event that I would look out for is the curtailment of energy subsidies and announcement of a higher gas price. Is there any big bang other reform other than energy prices that we are expecting in the near term by the end of this year, then I would say no. So if I see gas prices go up from the current levels, maybe not to the levels which every private sector industrialist wants them to be at, but if you see an improvement, that is something which would be a positive for the markets, and as in my books it would definitely be a positive. That's the way I see it. I don't think this government right now is looking at making any other big changes other than maybe energy prices in November, December.
Okay, Sandeep, hi, good morning. So what kind of returns do you think this market can deliver in the next 6 to 12 months? Do you think it could be paltry compared to what we've seen up until now this year?
See, if this market has to deliver another 35-40% returns, then there has to be, most importantly, another gush of cash which has to flow in. I think cash is coming in the market and continue to come until Feb-March. So I would be betting on a 10 to 15% kind of returns till the next budget, and not the kind of returns that we have seen in the first half of this year or in the first half of this fiscal year. So let's not go by the March to September kind of returns. That would probably be expecting a lot out of this market. But this market will still end up looking very good on a 12-month basis and would still prospectively look very interesting. That's the way I would like to put it, rather than say that it should do 30% and up every 6 months. No, that I don't think is a fair assessment.
Okay. Just another shorter-term issue. Sandeep, over the last week, we have seen FII flows peter out. Couple of days of minor selling, 10 crore, 6 crore, not a whole lot, but the buying has stopped. Is that a spot of bother that FIIs have allowed outperformance this far but won't allow any further?
See, two things were happening in the last fortnight, if I would say. One is the fact that there were jitters around the Scotland referendum, and if that had not gone down, the expected decision was no to independence, and if that's been an adverse outcome on that expectation, then clearly I think there will be bigger jitters in the markets right now. So we have gone past this. We are going back. So we had jitters in the last fortnight around that. The second thing which the markets have still to get their head around is what is the who will increase first, whether the UK will increase rates first or the US will increase rates first. What will be the quantum of increase, if at all, in the near term? I think there were jitters in the last fortnight around that. I think we have some clarity on some of these fronts right now. There are no big immediate hikes being planned. So I think flows will continue to come through India. And India finally has to be driven by its domestic savings. India's investment cycle has to be driven primarily by its domestic savings and investment. I think this Diwali is going to be a great Diwali. I see already indications coming across, in terms of spending coming through in cars. I think consumer spending on durables and mobiles and so on is going to be one of the better Diwalis that we have seen in the recent past. I think the economy is on an upturn, so I think this will something which will filter through in terms of bottom lines. I don't expect any big negative surprises coming through in the November reporting season, October-November reporting season.
Yes, in fact, we have had the festive season come many months earlier for us, Sandeep. I mean, with the way the market has been moving and good numbers coming in from the auto sector, etc. But I was just going through your model portfolio and you've made some changes there. So let's talk about that. You've introduced Marico into your model portfolio with a weight of 200 basis points. Just tell us about that stock in particular and also what you see as the trend in consumption now.
So as far as Marico is concerned, it's one of the better managed consumer stocks. Its valuations are more palatable to our valuation driven model portfolio building thesis that we have, where we are very disciplined on valuations. So Marico fits that. Not only that, its existing businesses are seeing an upturn. There's no big pressure coming through on raw material costs, and the new businesses are also scaling up very well, which is why we have introduced Marico. It's also it's also a good mid-cap name, which this market will definitely be going towards mid-cap as in the second leg of this rally in the next 6 to 12 months. So we have seen the big caps outperform, and now it's as the economy continues to gather steam, the mid-caps always do better, which is why Marico was introduced. As far as so was there a second part of your question?
No, it was pretty much on Marico itself. I wanted to ask you about the consumption trend and whether there are any other stocks, that fit this bill.
So in addition to auto stocks like Maruti and Tata Motors, which I have discussed often on this channel, I think the other consumption name, quasi-consumption name, would also be some of the internet stocks that we like. We like InfoEdge. We like Just Dial. These are combination of internet themes plus the fact that they also play on the very broader consumption cycle that's happening in the economy. So we would like both these names in addition to the auto names.
Well, actually, I was more interested in developing that mid-cap theme that you just started off by saying that, when the economy is in an upturn, that's the place to be. Okay, let me get to you some stocks where money has already moved in. The auto ancillaries, Bharat Forge up, and this is only year to date. A lot of the gains happened before that for Bharat Forge. Year to date gains is 150%. Motherson Sumi 125%, and then outside the auto ancillaries, the Voltas, the Carborundum, all of them up about 120, 125%. This list of these stocks. Would you still put more money in there?
Yes, some of these names we've been backing all the way in the last 1 year. I would add DCB Bank to that list, which you just, it's a banking stock, but it's still mid to small cap region in terms of market cap. And that's a business which is run by a very committed, driven team. And it's also going to see an upturn on the back of its own lending portfolio, which lends to small and medium SME enterprise, SME businesses. So and the consumption and the retail consumers. So that's DCB Bank, which probably we like. I think in addition to that, we could look at some of the pharma names. Glenmark is one such name. it's consolidating at current levels, but I think then FY16, FY17 we'll see good traction coming through from India, where it's anyway growing faster in the market. It's an extremely profitable business in India, and also the US and LATAM geographies will start firing for Glenmark. So that's one name that we like.
Well, it's interesting you point out that you would add Cipla into your list of into your portfolio, because in the last 1 month, I mean September has been a great month for Cipla. So much positive news flow, and the stock is already up about 20%. Is it still good to go for a lot more?
There's a new management who has been running the show for over a year. The stock has had issues, has had headwinds in terms of its performance, its reported performance. There have been also issues on costs which this business has faced. We believe that from the second half, that is from October onwards, we will see a resolution of that. We will see improvement margin. We are expecting improvement in margins coming through in the second half of this financial year, and also some of the businesses which were facing headwinds will start delivering. So I think the new management has got time to settle in, and this next 18 months would see definitely positive news on that. But yes, you are right. The stock has really ramped up, in fact, much faster than one expected in the last 1 month. So that's clearly been a good call.
Actually, we are hogging all the questions. Our money control guys also have similar questions for you. I mean, in the same sector. I mean, Sandeep, here's a question coming in from Kunal Sancheti. He writes to us from Malkapur in Kolhapur district. He has some investments in Wockhardt, which he bought at 825 rupees a share, and he wants to know whether he should remain invested in Wockhardt.
We don't cover the stock directly, so I won't be able to give him a price target. My sense is that the entire pharma sector, as far as Indian pharma is concerned, will see a good trend in the second half of this year. And therefore, one should continue to hold on to these names. In the pharma sector, what's the most important bit is either you focus on a big India name, which is something like Cipla, or you would say Cadila, a big India names, or you go for a larger name which has a pipeline which is going to bear fruit in the next 1 or 2 years, which is where Glenmark comes in. So if it has an international pipeline which is going to kick in terms of top line, then that's the way to play it. Otherwise, the difficulty with the pharma sector is that sometimes there are regulatory issues. We have seen that hit the entire sector time and again. And of course, there are balance sheet issues with some names. So we just have to be careful about that.
I'm being warned. I'm extending time. But Sandeep, you started off that digital stocks question. I mean, under the shadows of Alibaba, I just have to develop that point. Would you continue to look at any of the logistics guys? I mean, Snowman is some kind of a dream listing, but anything else in that space that you like, the Gatis and the Aegises, as well oil. We forgot about that. Anything in that space?
I think the logistics space will continue to do well. I think this next 1 year, I think, is going to be probably a bonanza in terms of internet shopping. I talk to a lot of people in the internet space which say that this will be a make or break Diwali season for the internet season. In fact, there's so much money power getting lined in this Diwali season that I think some of the brick and mortar traditional electronic retails are going to face a lot of pressure, and probably will see some categories decline in an otherwise fantastic Diwali season. So that's where it is. I think the stakes are really high in this Diwali season. So I think the courier companies and the logistics companies will continue to benefit.
So that means that you're still positive on Just Dial despite it trading at 70 times FY15?
The good thing about Just Dial, I don't know whether you have used the application or you have used their services, that they are trying to transition their model from just a search to actually delivering the product to you at a very competitive cost. So you actually get if you search for something and if you agree that they will actually send on to their paid subscribers the fact that you search for a certain product or service, and you will get calls back. I have used that often, and in my experience actually mostly the online prices beat the brick and mortar pricing.
That's true.
But sometimes you get very good transactions even from when you make those search engines and people call you in.
I think Alibaba is going to send you a gift voucher, Sandeep. Thank you very much for joining us with that exhaustive analysis on macros and micros. Pleasure speaking with you.